The saying, "May you live in interesting times," is often attributed as an ancient Chinese curse. While the actual origins of this phrase are subject to much debate, one thing is crystal clear: things are certainly getting interesting out there. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, buenos dias, morgen, and welcome to the latest episode of the Bitcoin Bulletin Podcast. Today is Wednesday, August 14th, 2024, and of course that means it is once again DCA Wednesday, and we have a lot to talk about. But before we get into all of that, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 856,803, and Bitcoin is ringing in at a US dollar value of $58,970. And the average normie out there, the average newbie, is busy lamenting that the price of Bitcoin is down. And we'll get into that in quite a bit here in the later on in the podcast. But I want to point out that Bitcoin is up more than $3,000 since last DCA Wednesday. So again, this is one of those times when you just need to zoom out and stop paying attention to the price on such a minute by minute basis, because you don't have to zoom out very far to see that Bitcoin is actually continuing up and to the right, even just on a week over week basis. Either way, Bitcoin's current US dollar value means that for every filthy paper fiat dollar that we swap for Bitcoin today, we will receive 1,696 Satoshis. Not quite as many as the 1,821 we got last Wednesday, when Bitcoin was $3,000 cheaper, but a lot better than the 1,500 sats we got a week before that. And, as Bitcoin was setting new all-time highs, we were trending closer and closer to where, one day before too long, we'll only receive 1,000 Satoshis per dollar at the $100,000 Bitcoin mark. And then fewer and fewer Satoshis after that point. For example, if we do break through 100,000 US dollars per Bitcoin by the end of this year, we may very well never see 1,000 sats per dollar again. So if you're like me, you want to stack as many Satoshis as you can. You want to get as many Satoshis per fiat dollar that you convert. And today we're going to get 1,696 sats per dollar, or at least approximately that, depending on what happens to the price of Bitcoin while we're talking. Bitcoin's current US dollar value gives it a market capitalization of 1.16 trillion. That is up from 1.08 trillion last DCA Wednesday. So again, up and to the right, nowhere near as high as, the market capitalization of Bitcoin when it set its cycle all-time high, which I guess was technically last cycle's all-time high. We saw a market cap of more than 1.4 trillion, but still a respectable market cap, significantly above that $1 trillion threshold, which I often say is a magic number for normies. That has that human psychology impact of making Bitcoin an undeniably world-class asset, monetary asset, solidly putting Bitcoin in the top 6 or 7 investments by market cap, and just under silver's market cap of 1.3 trillion. Although I saw somewhere earlier today where somebody was posted that silver was less than 1 trillion market cap right now. So I guess that really depends on who is making that estimate, because it's really difficult. A lot like with gold, nobody really knows exactly how much physical gold is sitting above ground in vaults or turned into jewelry, etc. And it's kind of even more so with silver, because while silver is more abundant than gold, it's also used a lot more frequently. A lot of silver is used in electronics. So, regardless of how much, even if we knew exactly how much is mined, we don't necessarily have a really good tally on how much silver has been put into cell phones and things like that. So we're going to stick with the number that we've been using, the source that we've been using for most of this podcast that lists silver's market cap as 1.3 trillion. Hopefully that will be moot anyway, because as Bitcoin eclipses silver and moves towards demonetizing gold, that that number is going to become more and more irrelevant. Of course, gold market cap is more than 14 trillion. So even if you believe that Bitcoin is just better gold, just digital gold, that it's just going to usurp gold as a global store of value or as a nation state reserve asset, a reserve asset for central banks or just countries to hold in general, even though like in the United States, for example, the Federal Reserve prints our Federal Reserve notes, the US dollars. So the US global stockpile of the US's stockpile of gold that they allegedly have in Fort Knox in Kentucky really doesn't back the Federal Reserve notes. It's more of a rainy day fund for the US government than an actual backing of our currency. But I digress. If Bitcoin were to surpass gold and become the electronic version of gold and stop there, not even go on to demonetize fiat currencies around the globe and to become the global reserve currency, but just become electronic gold, the price of Bitcoin would have to almost 14x from where it is today to do so. So just a reminder, plebs, that we are still early. I know the longer you've been here, sometimes it feels like you have been here long enough that you're not early anymore. Or even if you're brand new, if this is your first Bitcoin podcast you've ever listened to, you haven't even purchased your first sats yet, or you just purchased your first sats, you might feel like you're late because, Bitcoin's 15 years old now. And it seems like Bitcoin has already gone to the moon for some people. How much higher can it go, you might ask yourself? Well, it can go at least 14x higher, just if it replaces gold as a world reserve, a global reserve asset. Speaking of gold, for those of you who continue to value your wealth in shiny yellow rocks, it will currently cost you 23.9 ounces of gold to purchase just one Bitcoin. Just a year ago, almost exactly a year ago, on the DCA Wednesday episode on August 16th of 2023, you could have purchased one Bitcoin for just 15.2 ounces of gold. So while the price of gold and the price of Bitcoin have fluctuated, and we've seen, it ebb and flow a little bit, especially in the last couple of weeks, in general, it's one of those things where if you zoom out, Bitcoin is up and to the right, and gold is trending down and to the right, trending to zero in Bitcoin terms. I've made the prediction multiple times that before the end of this year, we're going to be talking about Bitcoin in terms of pounds of gold, not ounces. And that doesn't just mean 32 ounces of gold, meaning 2 pounds, because, when we're talking about an amount in the 2 pound range, usually people would still refer to that as 32 ounces. 2 pounds, 4 ounces, that's 36 ounces. It's not till you get to 3, 4, 5 pounds that you start referring to gold in terms of pounds of gold. And I firmly believe that we're going to be talking about pounds of gold before the end of 2024. Of course, I don't make predictions. I often say nobody has a crystal ball. I just think that, we're just beginning to get into this halvings bull run. I don't think it's really even started. Again, I'm going to talk about that more a little bit later on the podcast, but you'll see. I don't make predictions that often. Again, nobody has a crystal ball, but I firmly believe we'll be talking about pounds of gold to purchase just one Bitcoin by the end of this year, by the end of 2024. Certainly by the time Bitcoin sets its ultimate cycle all-time high, probably later, not later in 2024, but earlier in 2025, maybe the spring or summer of 2025. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 3,298 large pepperoni pizzas from Papa John's. That is one pizza every day for more than 9 years. And again, I don't make predictions, but you've heard me say often that I think we've gotten to the point where if you had one whole Bitcoin that you were trying to spend just by eating pizza, one large pepperoni pizza a day, you'd never be able to spend your last Satoshi, because 9 years is more than 2 additional halving cycles from now. And so if Bitcoin goes up to 100 or 200,000 this halving cycle, and then 300 or 400,000 or a million next halving cycle, and God only knows the halving cycle after that, the point being the number of pizzas that you are going to be able to purchase per Bitcoin is going to go through the roof as pizzas trend to zero in Bitcoin terms. And so it would pretty much be impossible for one person to eat an entire Bitcoin at just one pizza a day. And it's going to get more and more impossible as Bitcoin continues to accelerate up and to the right. Okay, that metric that you know has been my favorite for most of this podcast, and you know how I feel about TA, so this isn't any kind of official transaction analysis, but Bitcoin's 24-hour average transaction rate is up a little bit from last DCA Wednesday. Currently, we're looking at an average of 5.92 transactions per second on chain, and as has been the case for the entire history of this podcast, the transaction rate is up from last week, and the price of Bitcoin is up from last week. As they say, and as I say, correlation does not necessarily equal causation, but we've been doing this podcast for more than 3 years now, and pretty much without fail, anytime Bitcoin's 24-hour on-chain transaction rate has been up, the price of Bitcoin has been going up, and every time it's been down, the price of Bitcoin has been going down, and that certainly holds, at least this week. Speaking of on-chain activity, Bitcoin's mempool is a little bit fuller than it was last DCA Wednesday. According to Clark Moody's mempool at Clark Moody's dashboard, there are about 10,000, almost 11,000 more transactions in his mempool than last Wednesday, clocking in at 212,216 transactions. Mempool.space's mempool has always been a little bit larger than Clark Moody's dashboard, and it is showing almost 20,000 more transactions, actually about 18,000 transactions more than last Wednesday, with 250,260 transactions in the mempool.space mempool. And speaking of on-chain, if you need to do an on-chain transaction, if you're not using the Lightning Network, if you have a transaction that's a priority transaction that you want to make sure is mined in the next block or two, Clark Moody's dashboard is recommending a fee of 5 sats per B-byte for a high priority transaction, exactly the same as they were recommending last DCA Wednesday. What has changed a little bit, though, is that last DCA Wednesday, they were saying if you had up to a day to wait, that a fee of 3 sats per V-byte would be mined within a day. They're currently saying just 2 sats per V-byte will be mined within a day, and they're recommending the same thing for even a low priority transaction that you have up to a week to wait on. Mempool.space is telling a slightly different story. They're saying that a fee of just 3 sats per V-byte will be mined in the next block, or in the next block or two. That works out to just 25 cents in US dollar terms. That is as cheap as we have seen it in recent memory. In fact, scrolling back through my notes, I don't see anything that low in either Satoshi terms or US dollar terms, even when Bitcoin was significantly cheaper. Getting a transaction confirmed in the next block for just 25 cents worth of Bitcoin, just 3 sats per V-byte. That's pretty amazing, considering that you have an uncensorable, permissionless, immutable transaction that you can send to anyone, anywhere in the globe. Nobody can stop you, and you can do it for just 3 sats per V-byte, about 25 cents US dollars, in USD terms. Mempool.space is saying that that 3 sat per V-byte fee is the recommendation for any transaction, whether it's a high priority, low priority, or no priority. So they're not even recommending the 2 sat per V-bytes for a low priority transaction that you have up to a week to wait on. They're saying it's going to take about 3 sats per V-byte. And looking at the last several blocks, that appears to be the case. I haven't seen any blocks with less than 3 sats per V-byte included. The last 3 blocks in a row were averaging about, well, the averages ranged from 3 sats per V-byte to about 200 sats per V-byte. And there are plenty of people who overpay, usually exchanges or people who just don't care, that want to absolutely guarantee that their block is mined. Hackers do the same thing as well, because if they manage to hack into an exchange or wherever they're stealing their Bitcoin from, they want to guarantee it's mined ASAP before somebody has a chance to catch on to the fact they've been hacked and to bump a higher fee to hopefully yoink their sats back. But that's neither here or there. The point being, if you need to do an on-chain transaction, it is about as cheap as it's ever been. 25 sats or 25 cents to send an unlimited amount of money anywhere in the world is really just a phenomenal deal. And again, if you're one of those people that was considering upgrading your security arrangement, maybe moving to a multi-sig or a different hardware wallet, or just consolidating some of your smaller UTXOs that you were worried might turn into dust one day, if you've been DCAing into your hardware wallet and you have a bunch of UTXOs that are maybe 100,000 Satoshis, and you're concerned those might become unspendable one day, then now is the time to consider consolidating those at just 3 sats per V-byte. Now, I did get into this a little bit last DCA Wednesday, where I said that there are some important things to take into account if you are considering consolidating your UTXOs, that there are privacy and potentially tax consequences for doing so. If you've been stacking consistently from the same exchange and you've been using a different address every time, but it doesn't really matter because that exchange knows each and every one of those addresses belong to you. So those are already fully KYC'd sats. So it really doesn't matter if you consolidate from a privacy standpoint. But if one or two of those UTXOs might be sats you got from an individual at a Bitcoin meetup or from an ATM back in the day that didn't require KYC, or maybe you mined them. If they're not KYC'd Satoshis and you combine those with KYC Satoshis, you are giving up the privacy on that UTXO. So that's something to take into account. So before you rush into consolidating any UTXOs, make sure you know what you're doing. And that goes for pretty much anything to do with Bitcoin, whether you're, looking at playing around with a new hardware wallet or upgrading your security by going to a multi-vendor, multi-sig. You don't want to rush into that because, Bitcoin is immutable. It's not like your checking account where, if you make a mistake or there's a transaction that didn't belong to you, if somebody, steals your debit card and tries to steal your money, you can get that money back. With Bitcoin, once it's gone, it's gone. So most people that lose their Bitcoin to operator error, usually because they're trying to do something that's above and beyond their level of expertise. Oftentimes that's people that are trying to do the whole roll your own security, people building their own hardware wallet schemes. They're trying to outsmart the current best practices, and they end up getting themselves in trouble by making a stupid mistake. If you're using one of the more mainstream hardware wallets and you're using them and you've read the instructions or gone through the tutorial, Bitcoin's really kind of idiot proof. It's almost impossible to enter the wrong address and send your Satoshis to an address where you've just transposed one or two digits typing in a long string. Most of that has gotten relatively idiot proof, but if you do something silly, like try and create your own hardware wallet or accidentally time lock your Bitcoin for 1,000 years, my point being, there are ways that you can mess up and lose your Bitcoin, screw yourself out of your own Bitcoin without even being hacked, without your exchange being hacked. Sometimes you can be your own worst enemy. So my point being, make sure, as if with everything, you do your own research and make sure you're not in over your head before you start tinkering around with your Bitcoin. All right. We just had a Bitcoin mining difficulty adjustment literally just 3 blocks ago. So definitely since the last DCA Wednesday episode. It was just, minutes ago. And that was a downward difficulty adjustment. It got 4.2% easier or 4.2% more profitable to mine Bitcoin if you're mining at home or if you're a large commercial miner. For those of you who don't know, the difficulty it takes to find a block of Bitcoin, a Bitcoin block, is adjusted every 2016 blocks, which theoretically works out to every 2 weeks, with the goal of having one block mined every 10 minutes. Now that's an average, and mining Bitcoin is a lot like flipping a coin. If you flip a coin 2 times in a row, you might get heads twice. But if you flip that coin 2016 times, you should get 1,008 heads and 1,008 tails, or reasonably close to that. Sometimes blocks come in back to back, just seconds apart. Sometimes it takes an hour between blocks, but that is why the Bitcoin Core protocol waits for 2016 blocks to determine what that average is, so they get a much more reliable number. And they're shooting for an average of 10 minutes in between blocks. If the blocks are coming in faster than that, it gets a little more difficult to mine Bitcoin. If blocks are coming in slower, the difficulty is decreased, with the goal of making those blocks come back in line with once on every 10 minutes on average. In general, mining difficulty has been exactly like Bitcoin price. It's been up and to the right steadily for Bitcoin's entire history as more hash rate is added to the network, both because more people, more companies are getting into Bitcoin mining, even countries are getting into Bitcoin mining, but also because Bitcoin miners have improved in efficiency, in power, just like video games and computers. Laptops have gotten more and more powerful every year. Graphics cards have gotten better and better every year. Same thing with the equipment used to mine Bitcoin, has gotten more and more efficient And so even if the same number of miners were out there, the amount of hash rate securing the network continues to go up as old miners are replaced with new miners. So in general, we see the hash rate go up and to the right, and the difficulty get increasingly more difficult every 2016 blocks as well. But from time to time, like today, for example, we do get difficulty decreases. And of course, we are just 3 blocks into this difficulty epoch, so it's really impossible to know what's going to happen next. And there are websites that estimate what the next difficulty adjustment is going to be, but it's going to be 2 weeks, basically. August 29th is what it's looking like the next difficulty adjustment will be. And so those estimates are all over the place and completely unreliable. Anywhere from a negative difficulty adjustment of 0.08 to a difficulty increase of plus almost 15%. So that metric is really not even worth discussing right now. Nor is the next metric, which is the average block time. Blocks are, there's only been 3 blocks. So for those 3 blocks, they've been coming in a little slower than anticipated. They've been averaging 11 minutes and 58 seconds. What is interesting to note is that since last DCA Wednesday, the estimated hash rate securing the network has decreased by almost 10 exahash. Last week, there were 631.5 exahash estimated to be securing the network, and this week, Clark Moody's dashboard is estimating that's only 621.9 exahash. That is actually also to be expected, not necessarily immediately on halving day, but in the months after the halving, miners have to make a decision on what they're going to do with their less profitable miners. They don't always wait until their new miners come online before they switch off their older, less profitable miners, because they don't want to lose money. And when the mining reward is cut in half on the halving day, it doesn't really matter whether Bitcoin's going to continue to go up in price. Even if it goes up 10, 20%, it would need to go up 100% in price for those miners to retain the same amount of profitability. And that's without any difficulty adjustments. So usually we see within the couple of months after the halving, we determine whether the miners determine which units they're going to turn off, what they're going to replace them with, or whether they're even going to stay in the mining business altogether. So it's not unusual to see hash power ebb and flow a little bit, and definitely not to see mining difficulty decreases. Of course, we also see mining hash rate decreases. Of course, we also see hash rate decreases when we have heat waves in the summer or cold snaps in the winter. With some of the mining companies, for example, Riot in Texas, they have that gigantic mining facility in Rockdale, Texas, and they have a load balancing agreement with ERCOT where they turn off some of their hash rate, or all of their hash rate in some cases, when there's a tremendous power demand, so they don't end up with rolling blackouts or brownouts. That electricity becomes available for consumers, for homes, for businesses, for hospitals, etc. And they get paid actually to turn off that mining equipment in those instances. So oftentimes, even when normally you'd expect to see hash rate going up and to the right, you actually see short-term decreases in hash rate just because that mining equipment hasn't gone anywhere, but it's agreed to turn off for a while, so they can help balance the grid in times of high demand for electricity. Real quick, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps such as Fountain or Breeze. Podcasting 2.0 allows you to support your favorite podcast through the value for value model, and you can do so by either streaming sats on a per minute basis. If you determine listening to this podcast is worth 1 Satoshi per minute of your time, if you're getting 10 Satoshis worth of value per minute, that is up to you, and you can set it and forget it, and that will just stream Satoshis to this podcast or whatever podcast you choose as you're listening. What most people do, and what is also my favorite method of value for value, is the boost method. Sending a boost is basically sending a shout out where you can send a message to your favorite podcast, whether it's a shout out, a message of support, or whether you're announcing a local Bitcoin meetup. Some people send shout outs when a baby is born, just whenever they would want to send a shout out, whenever they would want to say hi. And because it's a Lightning transaction, it comes with some Satoshis. Fountain, for example, will also allow you to earn Satoshis by just by listening to podcasts, and you can keep those Satoshis, or you can send those Satoshis back to those podcasts that you're listening to in the form of value for value. Again, that is only available if you're listening on a podcasting 2.0 apps such as Fountain or Breeze. Fountain seems to be the more popular podcast. I don't know anybody that's listening to this podcast on Breeze anymore. All of the value for value that we've received in the last several years, at least, has come from Fountain. And that's the podcast app that I use when I'm listening to my favorite podcasts as well. Speaking of our listeners, our geographic distribution of listeners does not appear to have changed. That is not unusual at all. Oftentimes our distribution of listeners remains rather ossified. There is a caveat on this today, though, because when I pulled up analytics, there is a big orange bar and an exclamation point that says data delay. We'll have this fixed as soon as possible. Thank you for your patience. So this might not be the most accurate, but since it's been unchanged for over a month now, it probably still is accurate. So our top 10 countries for listenership remain as follows. Number 1, as has been the case for most of the history of this podcast, remains the United States of America. So hello and thank you to my fellow Americans listening out there in whichever of the 50 great states you're listening from. I know there's listeners in Puerto Rico and there's listeners in other U.S. territories. Those are not included as United States listeners by Spotify. Puerto Rico and the territories get their own breakdown, almost like they're different countries, even though they are United States territories. And you are a fellow American if you are listening from Puerto Rico or one of the other territories. Number 2 remains Argentina. So muchas gracias, amigos in Argentina. Number 3 remains Germany, Deutschland. So muchas gracias, amigos. Dankeschön, mein friends in Deutschland. Number 4 remains Canada. So hello to those of you up north of us in what some jokingly refer to as America's 51st state. Number 5 remains Luxembourg. So Dankeschön, mein friends in Luxembourg, or Morien, to those of you who speak Luxembourgish. Number 6 remains Spain. So hola, muchas gracias, amigos in Spain. Number 7 remains Colombia. So hola, muchas gracias, amigos in Colombia. Number 8 remains Mexico. So hola, muchas gracias, amigos in Mexico. Number 9 remains Australia. So hello, g'day mates, our brothers listening to us in Australia. Number 10 remains the United Kingdom. So thank you to our cousins across the pond in the United Kingdom. Hello to all of you, regardless of where you're listening. We have listeners all over the world, and that is really, really flattering because even though this is a US-based English language podcast, Bitcoin is for everybody. And it's really cool that we have listeners literally in almost every country of the world. On to the news. Of course, the big news today, at least if you're paying attention to the traditional financial media, the traditional news media, was inflation with the US CPI, Consumer Price Index, coming out today. And Yahoo Finance runs the headline. Of course, inflation remained exactly where it came in exactly where it was expected to be, at least the official BS inflation numbers. Yahoo Finance's headline, stocks rise as cooling CPI cements rate cut bets. Stock market today, stocks rise as key inflation measure increases at slowest pace since 2021. U.S. stocks edged mostly higher Wednesday as Wall Street embraced another encouraging signal on consumer prices that is set to help shape the near-term future of interest rate policy. The S&P 500 rose 0.4%, while the tech-heavy NASDAQ composite finished just above the flat line. The Dow Jones Industrial Average gained 0.6%, or more than 200 points. The Consumer Price Index showed price increases held largely steady in July. Consumer prices rose 2.9% year over year in July, the first time headline inflation has dipped below 3% since 2021. On a quote-unquote core basis, stripping out the costs of food and energy, prices rose 3.2% year over year. Both numbers largely met Wall Street forecasts. Of course, yesterday you had the Producer Price Index, which was also interpreted as generally favorable. Of course, these numbers are complete BS, and even by the best case scenario, even if their numbers were legit, even if they weren't hand-picked, cherry-picked numbers that the government chooses to make inflation look as rosy, as favorable as possible to the current administration, even if that were the case, and even if we were at their 2% inflation target, that would still mean that your savings is losing 2% in value every year. And of course, 2.9% was the number. So your savings are using 2.9% year over year. Obviously, I believe inflation's been a lot higher than that. If you've gone to the grocery store, you know that your groceries are not just 2.9% more expensive than they were last year. Groceries are absolutely through the roof. It's literally to the point where most people I know dread going to the grocery store. You know, you don't plan on what you're having for dinner and then go to the grocery store to pick that specific ingredients up, those specific items up. You go to the grocery store and you see what's on sale and you see what you can afford. You're making those hedonic adjustments that the government likes to make when they're deciding what CPI is. The problem is when the government makes a hedonic adjustment and says, I can't afford steak tonight, so I'm going to get ground beef. They swap ground beef for steak and then say, look, there's no inflation because you spent exactly the same. If your budget for groceries was $100 and you spent $100 on groceries, look, no inflation. You still got groceries for $100, even though you might be eating ramen noodles and canned tuna instead of fresh vegetables and a nice ribeye steak that you could have afforded last year. Of course, you know this. That's one of the reasons, if not the reason, you're a Bitcoiner. But it still pisses me off every time these CPI numbers come out, because when inflation isn't exceedingly rampant, normies actually believe this BS. They believe that inflation is under control. They believe that inflation is necessary. They believe what they're spoon-fed. It's only when things get ridiculous that people are really hurting that they start to question whether they're being lied to or not. And unfortunately, a lot of the normies out there believe the administration's BS that the only reason groceries are more expensive is because your grocery stores are screwing you over. They're price gouging. They're charging you more. They're raking in record profits just because they can, and they're hosing you over, and that it really isn't the fact that they've printed half of all the money that's ever existed just in the last year or so. James Lavish put this all into perspective on Twitter earlier today with a tweet saying, with today's CPI report, there will undoubtedly be confusion after the White House and their economists declare they are, quote, winning the fight against inflation. To balance this with reality, I conducted a poll yesterday. Unscientific, but with a sample size of 6,300 plus polled. Actually, it was way larger than that when I saw this tweet. It was almost 8,000, I believe. It is already 10x larger than the University of Michigan Consumer Sentiment Survey. Some findings. 92% said inflation has negatively affected them in the past few years. 59% said the effect was significant. Wages have lagged severely or not kept up. Food and insurance costs have been overwhelming, especially for families with kids. The comments break my heart. They will break yours too. We already got into that. Dr. Jeff Ross had another interesting tweet today, pointing to the St. Louis Fed, or Fred website. It says, my favorite page on the stlouisfed.org Fred site, quote, buying eggs with Bitcoin. Since they started keeping track in January of 2015 through July of 2024, the price of a dozen eggs in the United States is up 46%. From $2.11 to $3.08. So right there on the Fed's own website, they're showing 46% inflation. Now, granted, that's over 9 years, but the vast majority of that inflation has occurred in the last few years. And what's particularly funny, though, is that if you look at their buying eggs with Bitcoin, eggs are trending to zero. They've gone down 99% in value over the last 9 years, as opposed to going up 46%. I guess that was the main takeaway from Dr. Jeff Ross's tweet. Another disturbing metric on the U.S. economy, and we know this is United States centric, but it can be interpreted to influence or to determine how the economy is doing the world over, because while the laws are different, the economy is pretty much hurting regardless of where you are. George Gammon tweeted, according to Bankruptcy Watch, Chapter 7 filings are up 34.25% year over year. Chapter 11 filings are up 25.83% year over year. And Chapter 13 filings are up 16.818% year over year. In other words, the economy is booming. I'm assuming even without the /s, that is sarcasm, because we have been told this is the greatest economy in 50 years by the geriatric in chief in the White House currently and his clueless sidekick. And anybody that's living out there in the real world knows that is not the case. Moving on, Ecoinometrics on Twitter, at Ecoinometrics, publishes a chart that I like to follow, and it basically shows the halving cycle overlaid over the previous halving cycles, and then there's a shaded area that's the range that shows it how it compares to the range and to the mean of the previous halving cycles. And I've spoken a couple times now about what a quote unquote normal cycle would look like if history were to repeat or if it had rhymed. That a typical cycle, we would normally cross halving day about 3 to 3.5 times the cycle low. So if that were the case, we would have expected on halving day for Bitcoin to have been in the $45,000 to $48,000 range. Of course, that didn't happen, and we went on to set a new all-time high before the halving occurred, when normally we would not have expected to see a new all-time high until 6 months to a year after the halving. Of course, with that brand new all-time high at the halving, it kind of skews Econometric's chart, because instead of starting at 45,000 and then comparing the price to where we would have been in a normal halving, because they are comparing to the previous halvings, we started out significantly higher. So with the price pullback, it looks like we've dropped out of the range. So of course, I would posit that if it had not been for the ETF pump, the price of Bitcoin would be actually significantly lower than it currently is, perhaps in the $50,000 to $52,000 range, and not lamenting the dip to 59,000. That would be, we'd be $7,000 or $8,000 actually lower than we are, and it would be normal, and people would actually be pumped that we've had the halving and we're gently coasting up, and that we were getting closer to that face melting halving cycle bull run, where we'd be setting a new all-time high sometime around maybe Thanksgiving or Christmas, and then going on to set the ultimate all-time high sometime in 2025. Nonetheless, we did have that pump and the new all-time high before the halving. So many people are stressed out that Bitcoin is down 20% from the all-time high in March, instead of being psyched that we're slowly inching our way towards the next face melting bull run. Econometrics, in a tweet 2 days ago where they updated their chart that I was referring to, says Bitcoin is dipped below its historical post-halving growth trajectory range. If it returns to this range before year end, we're looking at a high likelihood of a 6-figure value for 1 BTC. Again, that chart, I think, it's comparing apples to oranges, because every previous halving cycle, we've been significantly below the all-time high, and we've been only 3 to 3.5 times the cycle low, that crypto winter low, the bear market low on halving day. And then we didn't achieve all-time high territory until 6 months to a year later, whereas on this chart, we started basically at a new all-time high. And so, of course, the price has pulled back a little bit as the hype has worn off from the ETFs, and other things have come along that have affected the price of every asset in general, Bitcoin included. Nonetheless, it will be interesting to see where we are a year, 2 years from now, when we've had a little bit more time. But it would be more interesting to see this chart actually adjusted for where we would have been if Bitcoin had not had that, if they'd smoothed out, if they'd removed the bump from that data. And I know that's that's a if wishes were fishes kind of thing, because we are where we are. The price of Bitcoin is what the price of Bitcoin is. There are black swans, there are golden swans, but this has been one of my favorite charts. It's been really cool to see, but maybe that chart's going to be completely useless this cycle, regardless of what Bitcoin does. Even if Bitcoin goes to $1 million or more this cycle, we won't really be getting decent data with that chart, because it will be skewed by the fact that Bitcoin started out so much higher than it would have without the ETF pump. Speaking of price, with global markets responding positively to the U.S. inflation numbers and the widely held belief that a 0.5% interest rate cut is coming at the next Fed meeting in September, you would assume that it would be good for Bitcoin as well. However, that apparently wasn't the fact today, with the price of Bitcoin actually down, even though it's up from last DCA Wednesday, as I mentioned a couple of times already, or at least in the beginning part of this podcast. Bitcoin is down about 2% in the last 24 hours. Again, you shouldn't really be looking at 24-hour price, but what this tells me is that the correlation between the good news for the stock market and the correlation of Bitcoin price is not there. And of course, Bitcoin shouldn't be correlated to fiat assets, to TradFi assets, because Bitcoin isn't a stock. Bitcoin is something unique, all in and of itself, the most perfect money ever invented, the most pristine form of collateral ever discovered, an uncorruptible asset. But lots of people have theories for why the price of Bitcoin is down today, even though the price of stocks are actually up. CoinDesk ran an article about 8 hours ago saying Bitcoin price may turn lower as crypto exchanges see $1 billion of Tether withdrawal. The previous two occasions when exchanges saw similar USDT outflows earlier this year occurred near local tops in Bitcoin's price. So CoinDesk is trying to tie in the price of Bitcoin to the price of Tether. Cointelegraph is bringing up the Silk Road Bitcoin FUD with the headline, U.S. government moves 10,000 Bitcoin. The U.S. government has once again shifted significant sums of Bitcoin that were required due to the Silk Road asset forfeiture. They did that previously, but a lot of people said that doesn't mean they were selling it. They were just moving it into a custody agreement they had with Coinbase. If that were the case, moving the same coins once again, would obviously mean something else potentially was up. So who knows? The Block is reporting nearly 600 million in seized Silk Road Bitcoin sent to Coinbase wallet. The Bitcoin appears to be part of the approximately $2 billion worth of Bitcoin the U.S. Department of Justice seized in the Silk Road case. Neither of these articles clarify actually that this was the same Bitcoin that they moved earlier, or if they're just moving additional Bitcoin into their wallet. Obviously, if you or I, if we buy a new hardware wallet, let's say you're upgrading from a Ledger or a Trezor to the Cold Card, you don't just send your entire stash to your new wallet. You want to make sure you didn't screw up, that your entropy was good. If you were rolling dice, you didn't do anything stupid like just roll the dice once or twice. That you don't have a Bitcoin wallet that's going to be swept immediately. So you send a test transaction, whether it's $100 of the Bitcoin or whatever. You don't send your entire stash. My point being, it's logical to assume that the U.S. government wouldn't risk all $2 billion of that Bitcoin by sending it in one fell swoop to Coinbase as well. Even if you're not upgrading hardware wallets where there's a risk that maybe you did something wrong in setting up the hardware wallet, you feel a little nervous about making a transaction, even though it's hard now to screw up an address when you're sending it. There's a little bit of a pucker factor until you see your transaction pop up on the mempool exactly where it's supposed to be. And my point being that if the government doesn't have to send all $2 billion of the Bitcoin at once, it would be smart to break it up into smaller chunks for just that same reason. So maybe that's the case. I would posit that Bitcoin's actually more valuable than it was last DCA Wednesday, that we're way ahead of the curve. The price of Bitcoin is a lot higher than it normally would be if it were just the supply shock of the halving being taken into account. We had all that Bitcoin being soaked up by the ETFs, some of that being offset by the people bailing out of Grayscale, finally able to sell their Grayscale investment trust Bitcoin when it was converted to an ETF. But either way, there was obviously hype, obviously euphoria, just like there would be from the 4-year halving cycle, where you get the euphoric top and then we retrace because Bitcoin got more expensive than it should have, than just based on the supply shock alone. There's that price discovery. Price discovery means testing the highs and the lows. And similarly, the same thing logically would have happened with the ETF hype. There would have been a little bit more exuberance than there should have been, and so it was natural that the price of Bitcoin would retrace a little bit while price discovery did its thing in relation to the Bitcoin ETFs. So I posit Bitcoin is ahead of where we would be, and if you don't believe me, just zoom out and look at that chart over the history of Bitcoin, and we are still most decidedly up and to the right. None of this, however, appears to be scaring away the TradFi investors. I think it was just last week when I spoke about, despite the fact the price of Bitcoin is going down and some of the ETFs were seeing outflows, the BlackRock ETF, the largest ETF, had never actually seen an outflow or wasn't actually seeing outflows, which means that the people that were investing in the BlackRock ETFs were not panic selling when the price of Bitcoin is going down. And we have additional news that indicates that the Wall Street investors that are welcoming themselves, that we're welcoming into Bitcoin, that are joining the Bitcoiners, whether it be through the ETFs or whether it be through purchasing Bitcoin and actually holding the Bitcoin yourself, are continuing to stack. And it isn't just BlackRock. The headline, Goldman Sachs involvement with Bitcoin. Goldman Sachs, a traditional Wall Street firm, has made a surprising investment in spot Bitcoin exchange-traded funds. According to recent regulatory filings, the company holds approximately 418 million shares across various US-based Bitcoin ETFs as of their June 30th filings. The breakdown of the holdings is as follows. Their largest position was in the BlackRock iShares Bitcoin Trust, holding 7 million shares worth $238.6 million. And of course, they have smaller positions in several of the other ETFs, including Fidelity with 1.5 million shares, Grayscale's GBTC, which I think is absolutely silly, but hey, if you're going to diversify for the sake of diversification, I guess they could buy Grayscale too, even though they have the highest fees and they're the scammiest of the ETFs, in my humble opinion. But nonetheless, Goldman Sachs owns 660,183 shares of Grayscale's GBTC ETF. They hold $8.3 million worth of the Bitwise ETF and $749,469 worth of the Wisdom Tree Bitcoin ETF. And last but not least, $299,900 of the ARC21 shares Bitcoin ETF. So while a lot of normies are lamenting the fact that the price of Bitcoin is down 20% from the all-time high, TradFi, Wall Street is loading up. And I think it's important to remember that, we DCA here because we want to continue growing our stack, and we're not trying to time the markets. We're buying slowly but surely. Slow and steady beats the race. Time in the markets beats timing the markets every time it's tried. And clearly Wall Street is doing the same thing. And it is in your best interest to stack as many sats as you can before Goldman Sachs, before BlackRock, before TradFi, before the big banks soak up so much of the Bitcoin that when it comes time to be on a Bitcoin standard, when we have hyper Bitcoinization, that you can't acquire enough sats to meet your goal, to establish that legacy that you might be trying to establish. Because don't let BlackRock, don't let Goldman Sachs buy up all the Bitcoin before you get your fair share, I guess is what I'm trying to say. One last bit of positive news. Remember in 2021 when El Salvador President Nayib Bukele announced the Bitcoin City development, which was going to be a brand new city, kind of on the border of El Salvador, Honduras, and Guatemala, on the big bay down there, nestled at the foot of a volcano. And it was going to be a city funded by Bitcoin mining using volcano power. And it was going to be a tax-free economic development zone. Basically, there were going to be no income taxes, no property taxes, no capital gains taxes. Basically, everything was going to be tax-free, I think, except for maybe a sales tax. I don't remember specifically, but it was kind of modeled on the economic development zone that they have set up in Dubai, kind of like Hong Kong and I guess other cities around the world used to be. And we haven't really heard a whole lot about Bitcoin City since then. It's been 3 years. I don't think ground had even broken on anything in Bitcoin City yet. But No BS Bitcoin is running the headline. El Salvador attracts $1.6 billion for port infrastructure development near Bitcoin City. The country is set to receive $1.615 billion investment from Turkish company Yilport to develop 2 seaports, supporting construction of its ambitious Bitcoin City. This marks the largest private investment in El Salvador's history. So that's really exciting. And I guess it's good to see that Bitcoin City is moving forward, because I firmly believe if El Salvador pulls this off, if they do build this economic development zone, if they do build this tax-free Bitcoin City, we've already seen companies moving to establish a presence in El Salvador. Not just Strike, but other major companies have established headquarters in El Salvador. And I firmly believe even more will do so once Bitcoin City becomes a thing. They literally could become the Dubai of the Western Hemisphere. And that would be really, really cool to think that El Salvador could go from one of the poorest countries in the world to one of the richest, most profitable places to be in relatively the blink of an eye in the grand scheme of things. I know it's been 3 years, but 10 years from now, looking back and on the last 3 years, it won't look like it took forever to get going. It'll look like something amazing, and it'll be almost impossible to believe that what happened has happened, and that's really cool. Speaking of people who are pro Bitcoin, I'm going to get into politics a little bit. I know I've already been into politics way more than most of you probably care to hear, and I don't want to alienate half of my listeners because we all have our different beliefs. There are people on the left of the spectrum, people on the right of the spectrum, people right up the middle of the political spectrum. But I want to talk about RFK Jr. for a minute. And this is not an anti-RFK Jr. rant or a pro-RFK Jr. rant. I actually love a lot of what RFK Jr. has to say. What he has to say about Bitcoin, I agree with everything he has to say about Bitcoin. I'm old enough to remember that he has certain policy positions that I do find unacceptable that he hasn't actually even mentioned in this race. For example, he's been very anti-Second Amendment in the past. He's avoided that like the plague this campaign, and that doesn't mean he's changed his mind. In fact, I would posit it means he probably hasn't changed his mind. He just doesn't want to talk about it because he knows it will alienate a lot of Bitcoiners, because Bitcoiners tend to be freedom maximalists, and in the United States, that means we're usually big supporters of the Second Amendment, which is the right to keep and bear arms. He's also a radical environmentalist, which I find hard to believe means that he wouldn't push for green Bitcoin, whether it's change the code or whatever. His beliefs on power generation and the environment don't jive with supporting Bitcoin mining. And so he hasn't spoken a whole lot about mining, other than he's kind of hinted towards that with his giving mining kudos for increasing the amount of green energy, for encouraging green energy, and mining has done that. So I guess that's neither here and there. My point being, if RFK Jr. runs the most successful third-party campaign of all time, it still means he would be lucky to pull in maybe 20% of the vote, which is nowhere near enough to win the election, but easily enough to siphon enough votes off to dramatically affect the outcome of this election. And in a race that is expected to come down to just a handful of votes, maybe even just a handful of swing states, that could very well mean we end up with a Harris presidency. While a lot of us would love to see an RFK Jr. presidency, we would certainly not like to see a Kamala Harris presidency. She is the worst case scenario for Bitcoin. And RFK Jr. throwing the election to Kamala is not an unprecedented concept. Bill Clinton won the presidency of the United States and was later reelected in 2 elections where there was a largely successful third-party candidate, the most successful to date. And as a result, Bill Clinton won the presidency without ever having received 50% of the vote. The majority of Americans did not vote for Bill Clinton for president, and yet he was president for 2 terms, having been elected twice. In 1992, for example, we saw that Ross Perot pulled enough of the vote in, almost 20% of the vote, that incumbent President George W. Bush lost to then Arkansas Governor Bill Clinton, with Bill Clinton only receiving 43% of the vote, and George Bush receiving just a little bit less than that. George Bush and Bill Clinton were neck and neck, but the 18% of the vote that Ross Perot siphoned off threw it towards Bill Clinton, where he would have lost in a landslide had those Ross Perot votes gone to George H.W. Bush. And most of them would have, because Ross Perot ran on an anti-NAFTA, anti-giant sucking sound campaign, something that Bill Clinton was a supporter of, and that's something that passed under Bill Clinton. Ross Perot was a conservative, libertarian-ish in nature. He was not the new Democrat, the new progressive liberal that Bill Clinton was pretending to be. So most of the votes that Ross Perot siphoned off were most likely George W. Bush votes. And as a result, instead of Bill Clinton losing in a landslide, he became the next president of the United States. In 1996, Bill Clinton was reelected with just 49% of the vote, and this time Ross Perot siphoned off only 8% of the vote, and as a result, Bill Clinton got a little closer to the 50% margin, but still would have lost 51-50, which would have been a much bigger margin than any of the recent elections, where we've seen them come down to less than 1% of the vote, when both Donald Trump was elected over Hillary Clinton, when George Bush was elected over Al Gore, and and both times that Barack Obama was elected president were by much narrower, slimmer margins. So it is logical to believe that if you do not want to see Kamala Harris elected president, voting for RFK Jr. is a vote for Kamala Harris. And that really sucks to say, because I love a lot of things RFK Jr. has to say, but a President Harris would be the worst case scenario for Bitcoin and the free market in general. I mean, she is the furthest left, the most communist, socialist candidate we have ever had run for president. Worse than that, it's widely believed that if we have a President Harris, we will have a Secretary of the Treasury, Elizabeth Warren. Elizabeth Warren is the biggest enemy of Bitcoin currently, at least in the U.S. Senate, or at least Elizabeth Warren is the biggest enemy of Bitcoin that we know about because she's been the most outspoken with her quote-unquote anti-crypto army. And I don't need to tell you why we don't need Elizabeth Warren as Secretary of the Treasury in the United States. Even if you're not a Bitcoiner, I think you can see why that would be a disaster. All right, that is as political as I want to get. I do apologize for going on that rant, but I think it's really important because a lot of Bitcoiners support RFK Jr. And I think it was Ben Justman of Peony Lane Wine on Twitter on the other day was talking about how he really wants to vote for RFK Jr., but he would rather see Trump elected than Harris elected. And so he was positing about whether or not he should throw his support and his vote behind Trump. He was, a lot of people were pointing this out to him that a vote for RFK Jr. is unfortunately a vote for Harris. Okay, enough of that, as I already said. The reason we're here today is because today is Wednesday, and every Wednesday for more than 3 years now has been DCA Wednesday. And if you're new to this podcast, if you don't know what DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, this is going to be our 160th stack. We started stacking every Wednesday. That is our regular interval. All the way back on July 28th, 2021. So far, we've stacked 159 times, stacking a total of $3,180 and converting it into 9,707,877 Satoshis. And we did so at an average purchase price of just $32,750.90. I have an episode from the other week entitled, I forget specifically what it's entitled, but basically I do a breakdown on our 3 years of DCA. And I have a couple of episodes where I spoke about it. Our 3-year anniversary, which was titled 3 Years of Stacking Bitcoin Every Wednesday. And then the following DCA Wednesday, when we were solidly beginning our 4th year, I entitled the episode Bitcoin DCA versus YOLO 3-Year Recap. And during that episode, I outlined how we have significantly more Bitcoin and our average purchase price is a lot better than had we YOLO'd in July of 2021, when the price of Bitcoin at that time was $39,716. So part of the reason we DCA is we didn't have what will be $3,200 by the time we make today's stack. We didn't have $3,000. If you're like me and you're only DCAing $20 a week, coming up with $3,000 to invest in a lump sum YOLO is just out of the question. So, but even if you did, you would have ended up with, I think, looking back at my notes from that show, you would have ended up with more than 1,700,000 fewer sats. Your stack would have about $1,200 less US dollar value. And your average purchase price, of course, would be $39,716. So by any metric, DCAing during the last 3+ years now has been more cost effective than lump summing, YOLOing in. And of course, if you only had $1,000 and you had split that $3,200 into 3 $1,000 purchases, you would be potentially even worse off because you would have bought at least one of those purchases at significantly higher than $39,000 even. But I digress. Today we're going to add to our stack, and we're going to do so once again using the handy dandy Cash App. Cash App is not a sponsor of the show. We don't have any sponsors of the show at the moment, at least. And we do, however, have a referral code in the show notes. Anyone who uses Cash App gets a referral code. And if you're considering using Cash App and it's available where you are, again, this is a you do you thing. But if you've already decided that you're going to use Cash App, use somebody's referral code, because you'll get paid a couple bucks for using the referral code that you would not have gotten paid if you don't use a referral code. So those are free sats that you're missing out on. I recommend if you sign up for any service, find someone you know who uses that service, use their referral code, because otherwise you're basically leaving Satoshis off the table. And we have referral codes for several services in the show notes. Again, none of them are sponsors. They're just services I use, and because I use them, I have a referral code. So I already have Cash App open. As usual, I already have money in Cash App, but One of the reasons I love Cash App is you don't have to. I have a debit card linked to my Cash App, so I could transfer $20 to Cash App right now, and they would let me turn it into Bitcoin immediately, and they would let me withdraw it to my hardware wallet immediately. Things that most other exchanges won't let you do. They'll either not let you purchase anything with that cash until it quote unquote settles, and that usually takes about a week, about 5 to 7 working days. Or, for example, like my old Coinbase account will let me purchase Bitcoin immediately with that money, but they will make sure it settles and won't let me transfer the Bitcoin to my hardware wallet as a result until it does. One of the other reasons I like Cash App is when I do decide to transfer this Bitcoin to my hardware wallet, and I don't do just $20 at a time because that would only be about 30 or 40,000 sats. Definitely something I'd worried about turning into dust. But after we have 100,000 or 200,000 sats, whatever your personal threshold is, they will let you transfer that to your hardware wallet for free, or wherever you want to transfer it for free. And so Cash App, Coinbase, for example, charges a mining fee, and they always overestimate the mining fee. In fact, every other service I use charges a mining fee to move your Bitcoin. And so the 45 cents we're going to spend approximately on fees for purchasing this Bitcoin today will be significantly less than the $1 or $2 or as many as $5 we've saved one time, where Coinbase would have charged, or Strike would have charged for moving that Bitcoin. That certainly makes up for the fact that Cash App charges a little more in fees than some other services do. Again, these are all you things. Do your own research. Pick a service that is both available to you, for starters, because Cash App isn't available everywhere, but that fits your needs. We, however, are going to use Cash App. I already have Cash App open, so it's as simple as tapping Bitcoin, tapping buy, entering $20, tapping confirm, and boom, just like that, we purchased another 33,199 Satoshis, and that increases our stack to 9,741,076 sats, getting closer to our unofficial DCA Wednesday goal of 10 million sats. Of course, we've changed our goal several times during this program, and once we do achieve 10 million sats, we're not going to stop stacking. We will adjust our goal. You will find that the longer you have been in Bitcoin, you tend to do that. After you acquire your first couple of Satoshis and you achieve that first goal, maybe you set that goal to be a whole coiner. And then if you achieve your first Bitcoin, maybe you set a goal at another quarter coin or another half a coin or 2 coins or 3 coins. My point being, we're going to continue stacking Satoshis as long as there's someone out there foolish enough to exchange their sats for our filthy paper fiat. Today's 33,199 sats did increase our average cost basis. We paid, Bitcoin got a tiny bit cheaper while I've been talking. We paid $58,888 per Bitcoin was the rate we purchased at. So that increased our average cost basis by $93.68. So our average purchase price is now $32,850.59. Still a lot cheaper than the $39,716 that would have been our average cost basis had we YOLO'd in back in July 2021. So if Bitcoin goes to the moon, when I firmly believe Bitcoin hits 100,000, our stack would have a US dollar value of $9,741,007. If your moon is $1 million, I don't think there's any reason Bitcoin won't see $1 million, maybe not this cycle, but certainly in the next cycle or two. This stack, even if we didn't add a single another Satoshi, and we will, of course, be adding sats, but even if we don't, at $1 million per Bitcoin, our stack would have a US dollar value of $97,410.76. There is no way you couldn't argue that was one heck of a return for just $3,200 invested in just $20 a week. I mentioned many times that back in January 2022, Fidelity's director of global macro said that Bitcoin will one day, actually not one day, he said by the year 2038, Bitcoin will be worth $1 billion. And that's just a jaw-dropping sum. But of course, if Bitcoin does become the world currency, the global reserve currency, if everyone's on a Bitcoin standard, that isn't that outlandish. A lot of people thought $20,000 Bitcoin was impossible to achieve back in 2016, or $66,000 Bitcoin seemed outlandish just a few years ago. And now we're thinking 100,000 Bitcoin doesn't seem like it's all that odd. So maybe Bitcoin will hit $1 billion by 2038. And if it does, this stack, without adding a single extra Satoshi, would have a US dollar value of $97 million. $97,410,760 US dollars. And that would just be mind-boggling. And there is nobody, even Michael Saylor, that couldn't say $97 million was not a significant, life-changing amount of money, especially if the fiat currencies around the world have debased, they've hyperinflated away. The normies that were still clinging to their pesos, their euros, and their dollars were, bringing wheelbarrows worth of cash just to buy groceries to the store, and you're sitting pretty with a today US dollar value equivalent of $97 million of the Bitcoin. It seems like, I don't know, in 2015, 2016, that's when Bitcoin was starting to draw media attention again, and people were running those articles that if you'd invested just $100 in Bitcoin 10 years ago, or $1,000 in Bitcoin 10 years ago, you'd be a millionaire now. Or in 2020, it seems like every time they run these articles, it's always, if you had invested X number of dollars just 10 years ago, you would be a millionaire now, or whatever their article is written about. It always seems to be about a 10-year timeline. And if you joined us in 2021, we're already 3 years starting on our 4th year now into that 10-year timeline. And 2038, of course, is more than 10 years from now. But, Adam Meister has his 210,000 block theory, which is kind of the up and to the right theory, which says that basically every 210,000 blocks, which works out to about 4 years, but it's based on block time, not human time. If you go back 4 years from any date in time, Bitcoin is always worth more now than it was 4 years prior. Believing that Bitcoin goes up into the right, 10 years from now, it's logical to believe that Bitcoin will be worth significantly more than it is currently. That's 2.5, 3 cycles from now. So we'll have had multiple supply shocks, multiple post-halving Bitcoin bull runs, providing that is still in play and that we haven't already achieved hyper-Bitcoinization. So nobody has a crystal ball. Who knows where Bitcoin's going to go? But I firmly believe, Michael Saylor does, that Bitcoin is going to go up and to the right forever, Laura, forever. And so along those lines, we're going to continue to stack Bitcoin to exchange $20 worth of US fiat into Satoshis every Wednesday, as long as people are willing to sell us Bitcoin for fiat. Along those lines, do not forget to join us next Wednesday and every Wednesday while we continue that journey together. But either way, don't forget to keep on stacking those sats, you sexy sat stackers.